So there's a lot of mentors out there. There's like Tai Lopez and Grant Cardone and Gary Vaynerchuk and, Peter Schiff and Kevin. There's just a bunch of people that I'm going to talk about in this video. But yeah, this is pretty much how to invest your money and different ways to invest your money. There's a lot of ways that I got written down here, and all of these are viable, actually. Now, there's two main ways that I'm going to talk about, which everyone does talk about, but then there's like a lot of other ones that you probably haven't thought of. So why am I making this video? I looked up Google Trends for how to invest your money, which is kind of funny. So when you start off in 2004, this by Google's means it's the number 50 here. It was like, okay, some people are interested, and then it kind of, decreased up until 2007. Then 2007, everyone wanted to know how to invest their money, right? Everyone just wanted to invest and buy houses and do all those good things, take out mortgages, and then we all know what happened. And then 2008 happened. And for a long time, for 4 years, no one was even interested in investing. Or 3 or 4 years, no one even cared. It wasn't up until about 2012 that people started researching how to invest their money. And there we are here. This is the all-time high, the most interested that the general population has been wanting to learn about how to invest your money. So that's why I'm making this video. I just wanted to share this graphic here. So this number is, 75, and, just a few years ago, it was like 20. For the ratios and stuff, it's kind of, Google has a long algorithm, but pretty much there's 3 or 4 times as many people that are interested in learning how to invest compared to a few years ago. So we're gonna start off with the, kind of generic way, I guess I should say. So we're going to talk about stocks, and everyone knows that, I like these. I've invested a lot. So stocks, that's kind of the number one way, but it's not necessarily the best way. Just this video is more about, saying which way is best for you to invest, like based on your personality, your lifestyle, how much money you have. That's important. So I guess we should start off with that. Generally to invest in stocks, you need I have a minimum per trade in stocks. You should have $500 ready to invest. That's what I'm going to keep this video plain and simple. $500 should be the minimum for you to have a good return. I guess I should talk about some of the mentors and stuff too. So, people that make a lot of their money in the stock market or give advice are like Peter Schiff. I'll talk about him a little more later with another way to invest your money. But he's a little bit crazy, but I love him. I love listening to him talk. And like Kevin O'Leary too. I made a video on Kevin O'Leary, which you can check out on my channel somewhere if you could just look up Kevin O'Leary. Kevin O'Leary likes high dividend stocks. I made a video on it. I'm not going to get too much into that because this is going to be it's not going to be mainly about the stock market. It's going to be mainly about the other 8 ways on here. So again, you need at least $500, and most people have $500 in savings that they actually, $500 in their checking account is different than $500 that they have to invest, because most people don't have $500 that they can invest. Most people live paycheck to paycheck, which is very, very sad, considering, especially I say this in a lot of my videos, I'm 22 and I have thousands and thousands that I can invest in whatever the hell I want. And I just graduated too. And I just don't understand how people can live paycheck to paycheck. But anyways, so there's different kind of ways you can invest in the stock market. I mean, I mentioned high dividend is the way I go. I'm not going to explain too much what these are, but high dividend means you get, 6% or 4% guaranteed return per year, something like that. So high dividend, there's the risk takers called penny stocks, which I don't recommend you do unless you are a day trader, but I just don't have the time to do that. So that's someone like Timothy, I think his name's Timothy O'Leary, does penny stocks. I think that's his name, Timothy O'Leary, something like that. I forget, that might not be his name. But yeah, so penny stocks, they're stocks that you can buy a mass quantity of, and they can double in price in a minute. They could also, go to zero in a minute. So they're very, very high risk, but people have made millions of dollars from that. So if you're high risk, you can do that. There's ETFs, exchange traded funds, and there's, like just investing in the S&P 500, but investing in stocks, unless you're a day trader, is like the most passive investment you can make. So what do I mean by that? You should invest in stocks, in long-term stocks, if you just want to invest in something and not even really want to look at it for a year, or at least like 3, 4, 5 months. It's one of those things where if you invest in Coca-Cola, even through a recession, at the end of the day, you're going to get a good return. So stocks, yeah, you're going to need, it's really easy to get into stocks. So keep that in mind. It's easy to get into, $500, and it's passive. So you pretty much don't really have to do too much work. I mean, if you just invest in really safe companies, then you're going to get a good return. Just don't be risky. It's a very passive way to invest your money. So the number one way to invest your money, I would say, is stocks, if you're looking to just put in zero effort whatsoever. So that's number one. I'm going through, that's the most generic one that people will tell you to do. Okay? And yeah, so I'm going to get into number two here. Number two is, in my mind, is the best investment you can make. Maybe not. It depends. I have some other good ones on here. But so number two, I would say is real estate. Excuse me. So real estate, for me, it's a pretty steady investment. It's a good investment in the long run. So there's a few downsides to this. You're going to need a large down payment. I mean, to get into the real estate market, unless you get investors, which I made a video on, unless you get investors or able to get like owner financing or something, you're going to need at least, I don't know, 15 grand is probably minimum. I mean, $15,000 is the entry fee for this. So we're talking, if you're a good saver, you can probably save 15 grand in about 2 years. But most people just don't know how to do that. Most people will never have $15,000 in their bank, which is kind of sad to think about. I think 80% of people now rent, no, it's not 80. It's 44% of people rent. That's right, because the home ownership is like 60. It's like 50 or 60%. Yeah, so it requires a large down payment, but you get two types of returns. You get appreciation, meaning that the value of the house goes up. So appreciation is just the real estate market goes up, which in the long run, usually it does if you're in a good area. And two, if you're real estate investing, you have to rent out the property. So you get rental cash flow. And most properties, it's only a few $100, but it's good. A few $100 a month, it adds up. So let's just see. You can get a property manager, but if you don't get one of those, which not a lot of people do, this is kind of a hybrid. It's like a passive and active investment. It's something that you have to worry about to get a tenant, which usually for me, it takes about 24 hours for me to get a tenant into my places. But, some people it takes weeks, months even. But so it requires an active and passive, an active and passive investment. That's what it is. So if you don't have an automatic pre-authorized payment hooked up to someone's bank account, then, you're going to need to go to their place once a month. You're going to need to knock on the door, collect a check. I mean, you're going to have to go to the place if they break a toilet or something, or, pipes are clogged, or there's some sort of problem with the house. I mean, but for the most part, there's minor problems I've seen every 2 months usually. There's just some minor thing which can be corrected in an hour's work. So I don't know. Real estate's a great investment because you get kind of a dual yield here. I mean, I've seen real estate have returns of 10% for big buildings, or 12% for some years, 15% some years, but you get a good return, and I like it a lot. I like real estate. So again, you're gonna need to be an active / passive investor, and it requires a large initial investment. So I guess I should say the mentors for this would be like Grant Cardone. He's a good one, Grant Cardone. Oh, excuse me. Grant Cardone, there's a bunch of real estate people. There's like Bigger Pockets podcast. That's a great podcast you should check out. They every week or so they have on a real estate investor or agent, and they just talk about real estate for an hour, 45 minutes, something like that. But Grant Cardone, for those of you that don't know, I think he has $350 million in real estate. He does a podcast. I think he has 2 or 3 podcasts actually. And yeah, you can learn a lot. He does some sales pitches. I'd say about 25% of each of his podcasts are sales pitches for, an online program or something like that. But you get some good information, you get motivated. And yeah, Grant Cardone's a good real estate investor, obviously, because he has $350 million in real estate. You learn how to do deals, you learn how to avoid taxes, you learn about depreciation. So yeah, Grant Cardone would be your mentor if you're looking to invest in real estate. So those are the two basic ways to invest: the stock market and real estate. Now, I'm going to get into some ones that, I don't know, you might have heard of, and next one for sure you've heard of, but people don't really think about. So next one here, I would say the mentor for this one would probably be Gary Vaynerchuk. Am I spelling that right? Gary Vaynerchuk. So he started a wine company a decade ago, something like that, and made millions of dollars. Then he made a marketing company. He's a good motivator, but what do I mean by this? It's starting your own business. So we'll just say a business, generic business. All right, generic. Even though it's not generic, I mean every business is unique, and Gary Vaynerchuk's awesome. So yeah, this could be anything. If you want to invest money and you have to be active for this one. I should say that Gary Vaynerchuk's active in his businesses. Like, he works all the time. If you want to work all the time and have that be your full-time job and be an investment, great. So this is something like maybe you want to open a restaurant. How do you spell restaurant, by the way? Is it restaurant, like that? I think that's it. If you want to open a restaurant, do I have some examples on here? I don't even know if I have examples on here. You want to start like a marketing company. Or, I don't know, there's a bunch of things. Maybe you want to, Gary Vaynerchuk did a wine company. So you could pretty much, you know what I mean. Just any sort of company that you want to open, anything that you have a passion for, that's what you can invest your money in. Generally, for a physical business, not an online business, like a physical business, you're gonna, see, I've seen some deals, like I listen to deals all the time at my office, and for restaurants, that can be a $30,000, $40,000 or $50,000 investment to start. If you want like a franchise or something like that, if you want to start your own, maybe you can get in for as little as five grand maybe. If you just want to rent no, you're gonna need more than that for a restaurant. So we're just gonna say, if you want to start your own business, you're probably gonna need a minimum of 20 grand. If maybe you're selling products or shirts or something, it can be, maybe like a $500 in some cases. It just depends. But at the end of the day, you're gonna have to be active. You're gonna have to hustle. This is gonna be your life if you want to invest in your own business and start a business. But that is the third way to invest your money. Just start your own business. Even, let's just say you want to keep your full-time job. You want to keep your full-time job, but you want to start your own business too, which, actually, if you do that, you might want to read the contract. If you're an employee, read over your contract, because if you start your own company while you're an employee, some contracts will state that the company that you work for will own any business that you start. It's kind of bullshit. So read over your contract. I hope I'm never an employee. I've had, actually funny story is that I've had like, how many jobs have I had? Like I've worked for 3 or 4 companies. I think three major companies, I should say. And I have never had a job interview. I've never signed a contract. I am an independent contractor. I just invoice people. I hope I'm never an employee, ever. And I don't think I will be. Based on how things are going, I don't think I'll ever be an employee, which is kind of great to know. But we'll see. A recession could hit or my business could end or whatever. So we're going to get into number 4. This is kind of, it's not really an investment. I mean, but I kind of just made a video on I don't even know what the order I'm going to release these videos in. But yeah, so number 4 is debt reduction. Something that people don't think about. And I should say, you know what? I should say bad debt reduction. I'm going to squeeze in the word bad here. Because good debt, I'm going to talk about this, is good debt is like rental mortgage debt. Like you're borrowing money to invest. That's good debt. Maybe you're leveraging your money in the stock market. That is usually a good debt. But student loan debt, bad debt. Very, very bad debt. But yeah, putting money towards your bad debt, I mean, that's good. I'm a big fan of just being debt free. So a mentor for this is like, I'm going to talk about him a little bit more, but this is like, I think Gord Ramsay. I don't know if I'll write his name, but maybe I will. Gord Ramsay. I think that's how you spell his name. So he's a radio show host. I listen to him sometimes, not all the time, because he kind of teaches the average person how to not be poor. Like he doesn't tell you how to necessarily make a lot of money, but he teaches you how to not fuck up. So in general, he's a good person to listen to. Hopefully I'll meet him one day. I hope I meet all these people on this list one day. I think I will. I think that's going to be, you know what, I'll set my goal. I want to meet everyone I talk about on this video. And hopefully in like 5 years, I'll make a video referring to this, about how I met everyone on here. Yeah, so let's just see here. So debt reduction, what do I have to talk about here? Oh yeah, so big thing about this is it gives you freedom. If you have, I don't know, I think the average student loan debt right now is $30,000. I know that the average student loan is $50,000, but in terms of remaining balance, it's $30,000. So if you have like $1,000 to invest, you know, might as well just throw it down on there, lower your monthly payments. If you can, sometimes they're closed loans where you can't pay them back whenever you want. But I mean, I would like that. Pay down your debt, gives you freedom. It's not even passive. It's just like, I don't even know how, this is just a smart thing to do. It's just a smart thing, requires no effort. I mean, you gotta, contact your bank? Or maybe you just go online and do an extra payment. I mean, there's zero effort. That's it. And it just lowers your monthly payments for years and years and years. What else do I have to say on here? But then there's, student loans, there's, credit card debt, there's mortgage. There's bad mortgage, I should say. So credit cards, pay those down. That's always good. I think that the average credit card debt is a few $1,000s right now. It's like $2,000. So if you have an extra $2,000, pay for those fucking cards down, people. Don't be stupid. And then we have the bad mortgage, which is does that fit on the screen? Yeah, it does. I can go a lot lower than that, I guess, eh? But yeah, bad mortgage is there's no such, I don't know. I was going to say that there's no such thing as a bad way to buy a home, but it kind of is. If you overextend yourself and a mortgage payment's very high and you put a low down payment and you lose your job, that's terrible. But yeah, bad mortgage. So what do I mean by bad mortgage? I just mean like if you're owning your home, which I'm a big fan of, if you own your home and you don't want to own more property or any rental property, then that's like putting money down on that mortgage is a good thing to do. I call it a bad mortgage because I don't know why. I shouldn't have called it that. Anyways. But yeah, so that's number 4 is just pay down debt, pay down your credit cards, pay down your student loans. That's a good way to invest your money. If you have any debt right now, that's a good thing to do, any bad debt. So we have a bunch more on here. This is going to be a long video, isn't it? Oh, Jesus. Yeah, we do have a lot more. Oh, no, we don't. I think that, no, we have a decent amount more. One thing that, this one is going to be quick and short. Something that people don't think of is think of something that goes up in value over time. And in my head, I was trying to think of like different creative ways where people can invest money that isn't stock market and real estate. And I found a funny one. Wine. I just talked about how Gary Vaynerchuk opened up a wine company. Well, he did it differently, but if you buy and sell wine, so I should say, but not buy and sell. That's a bad. If you buy and hold wine. So if you buy and hold like Burgundy or something like that, like a 2016 Burgundy, hold on to it for 50 years. If you have a bunch of those, it can be your retirement savings. If you want to have retirement savings, I don't. I want to have investments. So I was looking this up, and if you invest in high-end wine and hold it for a very long period of time and don't drink it and keep it in a wine cellar in a controlled temperature room, you can see returns like 7 to 10% per year. Just constant for 20, 30, 40 years. Because wine gets better with age. And people will pay more for old, great wine, correct? So it's a kind of because it gets oxidized. Sorry, I'm not going to go into my chemistry background. But yeah, investing in wine. Kind of an interesting one that people don't think about too much. Because every single time, no matter what type of wine you buy, it's going to get better and more expensive with age. So just something to look into. But you have to keep in mind, actually I should say, what type of investor do you have to be? Very, 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 very passive, but you just have to be careful. That's it. You just buy the wine once, put it in your wine cellar if you have that, if you're lucky, or just put it in a temperature controlled room and just leave it. Just leave it. And 10, 20, 30 years later, you can sell it and it'll be worth 5, 10, 15 times more than whatever you bought it for. Great. So we talked about wine, which is a weird one. We're going to talk about one which I've actually looked into recently. Before even researching this video, I was like, maybe I could jump into this, maybe, but I'm a little bit weary. So this is number 6. And this is lending. So lending, you know, when you want money, you go to the bank and you say, hey, I want a mortgage or a loan, and I want $1,000, and I'll pay you back $1,200 within the next year. So the bank makes $200 in a year on a $1,000 investment. And yeah, that's pretty much what you'd be doing. Lending, except there's online companies for this now, which is quite interesting. So there's peer-to-peer lending. So I don't know, you would need at least $1,000 to get into this, I guess. So the entry fee is pretty low for the most part, but like it's risky. I mean, like you have to credit check people, or you can just trust one of these online companies, which, you know, it's tough to do, but like I would in some situations. And you can get quick returns though. You can get quick returns. This is again, it's a pretty passive investment, but there's like an initial part where you have to do your homework at the very beginning, and then you just don't worry about it and just make sure you collect your check every month, and that's it. So it's pretty passive for the most part. Someone who does this, I'm just trying to think here, who has a mortgage company that I know? Does Kevin O'Leary have one? I'm not sure if he does. He has an investment company. I just don't know if they do loans or not. Oh, no. I know. The guy who owns Cleveland Cavaliers, the Quicken Loans guy. I forget his name, though. But he's a good example for this. He, the owner of the Cleveland Cavaliers, I think that or something like that. Or is it Detroit Red Wings owner? I don't know. The guy who owns Quicken Loans, that's a good example. Yeah, someone who makes a lot of money from lending money. So if you have $1,000, generally you can make like $200 on a $1,000 investment, or maybe I think it's maybe $100. I don't know. It just depends. So that, I don't know. It's a pretty good thing to do. Something to think about. It's risky. You can get high returns. It's not for everyone, is what I'm trying to say. And a lot of the times it requires face-to-face stuff. And a lot of people don't like talking to people. But for this, you're going to have to like do credit checks and get police reports, and if you want that. And so there's an initial time investment, but then you just don't have to worry about it after that. So we got lending. What else can you do to invest your money? There's lots of things. There is, I love this one. Something that not a lot of people think about as investments, but I thought this was kind of a scam. Not a scam, but I don't know. I thought it was a little bit of a scam up until I started doing this myself and investing in oh, Jesus, is this marker running out? I don't know. Investing in, oh, Jesus, did I say that? Investing in self-education to kind of improve your skills for something else, for your job, for a future job, for your business. So someone who has a YouTube channel, which a lot of people hate him, I like him. I listen to his stuff. Now he's a smart guy. I can tell he's a smart guy. I can tell he's a genius. I'm actually a genius, like a certified genius, like IQ of I think my last one was 152, but mine's around 150 for the most part. I think it's probably lower now because that test was like 4 years ago. But so a guy who does this is Tai Lopez. So he's a fan of self-education. He educates people and educates himself, but he's a big proponent for educating yourself. So what are the advantages for this? I kind of went over them already. You kind of help learn skills, which can be applied to, you learn skills that can be applied to, your own business. Or your job. That's kind of what this is for. Helps to increase your income stream a little bit. That's what self-education's for. Now, this kind of leads into stuff like network marketing, which Tai Lopez does. Oh, I'm losing my voice here. Excuse me. But yeah, so self-education, if this is active, you have to be active for this too, because you have to learn. It's not as active as running your own business, but it's like you have to put in an hour here, an hour there, and you just got to learn. It's something that you might be interested in. Let's just say, for example, you're a designer. You are, actually, I'll use graphic designer. Okay, you're a graphic designer. Someone close to me is a graphic designer. And you invest $500 in a course that's going to make you a better graphic designer so that maybe you can get a raise. Maybe you can get a better graphic design job somewhere else, right? Something like that, so that you're better at what you do. And so that $500 or whatever I just said, maybe that turns into a $4,000 raise. Something like $2,000 raise, $1,000 raise, something like that. So that's a big one, self-education. I'm gonna try and get through this without losing my voice. Because my voice is just going. I've been recording a bunch of videos today, and my voice is just, it is just a bunch of poop. That's what it is. My voice is a bunch of poop. So we are going to get into, what was that? That was number 7? So this is number 8. Number 8 is, oh yeah. This is a long story. I'm not gonna get into this too much, but I guess I'll write it down here. Save it. Okay. I'm just gonna write this and then you can see. Okay. 401k or savings, RRSP is what it is in Canada, or bonds. Like, it's kind of the same thing. Bonds, they're a little bit different, but whatever. This is what Gordon Ramsay loves talking about. This is a big Gordon Ramsay thing. Gordon Ramsay. So on his radio show, this is what he talks about. Invest in your 401k and savings and RRSP and bonds. Oh man, I don't want to dive too deep into this, into my opinion on this. This should be its own video. Okay, I'll talk about it a little bit. So this, if you're going to invest your money, I would say this is not a great way, but it's better than spending, I should say. Better than getting some dumb shit. So it's better than spending. It requires, usually for 401k, RRSP, or savings, or something like that, a lot of the times it's like automatic. They'll take it out of your paycheck if you sign up for it. So it's like there's zero effort. There's zero effort into this. Let's see, I have some more points here, and then I'll give you my conclusion on my opinion on this stuff. So, actually, no, I'll just give it. Screw it. When you invest in a 401k or an RRSP, retirement savings plan, well, that's what it is in Canada, or a savings account or bonds, it's your money. Your money is stuck, which is I hate. You can't access it without a penalty. So when you invest in your 401k, I think that there's a rule that you can't withdraw any until you're 60. That's the rule, I think. Yeah, without penalty. And by the way, so people think that when you put your money in your 401k or your savings or RRSP, people think that you don't get taxed. That is the biggest misconception about this stuff. So you get taxed, okay? But you don't get taxed when you put the money in. You don't get taxed when you're 30 years old putting money into this stuff. A lot of the times your employer will match your 401k contribution, but like at the end of the day, it doesn't add up. Like, you might as well just invest your money in something, by the way. Because your money can, if you get a 6% return for 10 years, it doubles your money. It's essentially doing a 401k in 10 years, but whatever. So where was I? Let's see, you can't withdraw your money till you're 60 years old. Where was I going with this? No, I got too off track. Didn't I? 401k, yeah. So, oh yeah, taxes, that's what it was. So you don't get taxed when you put your money in, but what people don't tell you is you get taxed when you take your money out. Fully taxed. It counts as income tax, pretty much. I mean, like, the reasoning behind it is that if you're making $40,000 a year and you put money into your 401k, you're going to get taxed while you're putting your money in. You're going to get taxed at about $40,000 minus the money you put in. Okay, but then when you take it out, the reasoning is that your income will probably be less than $40,000 a year, and that's if you're stupid. Okay, so people that put money in here that think that they're not going to get taxed, it's just dumb. Like, if you have to survive on $20,000 a year, most likely, if you have a 401k, something like that, you're going to get taxed still on it. And that tax in the United States, it's like 15% or 20%. And in Canada, I think that'd be 20-ish if you're making 20k a year, something like that. But yeah, so this is, I mean, it's better than spending your money, but not by much. I mean, if spending your money makes you happy and work harder and motivate yourself, it might be better to spend it, seriously, because this is just like your money gets stuck for like 4 decades or 3 decades, and it gets taxed when you get out. It's essentially just putting off your income tax. And I guess it's for people who are stupid with their money. That's what those are for. So you might not even live to your 60. That's why I don't like that. So is this for you? I mean, maybe you want that. Maybe you want to like have a nest egg because you know you're bad with money. So, I mean, bonds are kind of similar. I should talk about bonds maybe a little bit, but bonds, they're not having a good return right now. It's like 3% for 10 years or something like that. So it's government issued bonds. If you put in $1,000, you'll make like $30 in 10 years. And it's essentially like putting your money in a checking account, except you can't access it. That's why it's similar to savings and RRSP. Is that once you have your $1,000, you will not get it back until the end of the term of the bond. So, but yeah, I don't know. What would I rather have, bonds or RRSP or 401k? I don't know. That's actually a good question. I'd probably have bonds because those are at max like 10 years, right? But RSP is like decades. So, I don't know. Number 9. Number 9 is... So, let's see. There's that. Oh, yeah, this is a cool one. Someone, there's a mentor for this. So, I don't know, what should I call this? I'll just say angel investing, I guess? That's not the right term for it. But there is actually someone who is famous, who, I'll just talk about it right now. The mentor for this is Ashton Kutcher. So what's kind of funny is that Ashton Kutcher has made more money from investments than he has from acting. Isn't that weird? He's invested in, I think it's Skype. He invested in Skype, in Uber, and Airbnb. Think about that. He was one of the initial investors for that. So pretty much what angel investing is to me, although I should use a different term, maybe capital investing, it's directly investing in a private company. Not like the stock market where it's public. That's what it should be, just private. That's what it is, not angel. Just say private investing. So Ashton Kutcher is a good example for this. Yeah, he's made more money in private investing than he has in acting. Weird, eh? And he gets paid millions of dollars to act. So that puts things in perspective. So let's just see if I have an example here. I don't, but let's just see private investing. So maybe going up to, I don't know, the startup capital for this can range dramatically. And I'm talking like, I would say probably minimum like 10 grand if it's like a friend's company. So if it's like $10,000, it's risky too. It's risky, but it could be, because I think it's 95% of companies fail in 5 years, which is actually kind of amazing. Because I'm on year 2? 1, 2. I don't know. I have 4 more years, and I'm not going to fail. I don't think so. So it's risky. 95% of businesses fail in 5 years. You're going to need a startup capital of $10,000 to... It depends. Like I've seen, there's investments that go up to $10 million, but that's not realistic. So we'll just say $1 million, which is still not very realistic for anyone watching this. But unless I have a few. I know for a fact that I have a few people that watch my stuff that probably have a few $100 grand in the bank, and they follow me on Twitter and stuff too. So, but. Yeah, so it's risky. It's risky. And this is kind of active, I guess. I mean, you're not the one running you're essentially what you're doing is like you're investing in Gary Vaynerchuk's company. You're doing like, you're just putting up the money saying, hey, I want this amount. I want some equity in the company. I want these returns, hit these marks, and I'll be happy. A lot of the times that doesn't happen. I mean, Carrie Neistat. I think Casey Neistat, I think a few weeks ago or a week ago or something, he sold his failing app called Beam to CNN. He just sold the app to them, which was kind of, but he talked about how he had to get capital investors, and he got investors from $50,000 to $1 million in some cases to launch this app. By the way, if you need $1 million to launch an app, you're not launching an app properly. I can launch one for a good one for probably $5,000 to $10,000, but actually I'm going to do that, by the way. I have an app coming out eventually, or kind of, not me actually, I think my family's doing it, but I might jump in. I don't know, I might promote it. We'll see. So, yeah, this is private investing. It's kind of active. It's not as active as running a business, but it's like you have to keep an eye on the company, do what you can to help out. If they want help with marketing, maybe help out with that. If you want, maybe you have to hire and fire people if you own a majority of the company, which happens sometimes. I mean, actually, I hear like stories. I don't know if you've heard of the guy who he had an opportunity to invest in a company. Have you ever heard of that guy who invested in a company? So there was a guy, a lawyer. He was a wealthy guy, but not like too wealthy. He owned like a farm or something. And he had this friend named Jeff come up to him in like the 80s or 90s, maybe mid 90s. Is Jeff just like, hey, I'm going to launch this online store where people can like sell products and buy products. And I need an investment of like, I don't know, $50,000, and you can take a third of the company or half the company or 40% of the company. The lawyer said, you know what, I'm okay with how much I'm earning right now. I don't want to take that risk. So that lawyer didn't take the risk. He just kept being a lawyer and doing all that. And the guy, Jeff's last name was Bezos, the creator of Amazon. So that lawyer's stake would be worth $100 billion, close to it. Yeah. So that's what private investing can do for you. Like the guy who I don't want to get too off track here, but the guy who invested in Apple, funny story actually, not funny, kind of sad. There was a professor or a teacher or something like that. There were 3 people who started Apple. It was actually 2. It was Steve Wozniak and Steve Jobs. They made the first product. They had an investor. And that investor put up $10,000, had a third of the company, and cashed out for like $50,000 within 2 years. This was in the 70s. Imagine having 33% of Apple right now. So that guy ended up being a professor, and he ended up just being middle class forever. He's very, very old now. He's in his 80s. He might have died. I'm not sure, but yeah, it just sucks. Just sucks because, and Steve Jobs and Steve Wozniak, they didn't give him anything after. Even though he helped start their company, he cashed out and they just didn't give him anything afterwards. So, I mean, I understand it. It's business, but you think that they would throw him like 10 grand or something. Anyways, so there's private investing. There is, oh, I like this one. So this is something that I'm kind of doing. Online business and product or product. So an online business or product, this is a good way to invest your money, but you have to be semi-active. You have to put out content or create a product, and then from there it can be largely animated as long as you keep an eye on it. So what do I mean by how can you invest in this? I mean, you can create an online business. Like you can, if you put in time, you don't need a lot of money for this. If you put in time and maybe $500 and you have content or a product, then you can create yourself a nice little online business. I mean, I get paid from YouTube. I actually still get paid from my science channel, which I haven't touched in a year. And like it's like my gas money every month, which is kind of nice. It's a couple $100 still, even though I haven't touched it in like a year or 6 months or 8 months. So yeah, it's a good way to invest your money. You know, if you want to do the YouTube thing, you can, buy a camera or maybe just use your iPhone and you can get paid through ads. I mean, like, excuse me. I mean, some of, I've had some videos on my science channel, on my business channel. They make me, some of them have made me thousands of dollars. Like one video has made me thousands. A few, by one video, I mean, like I've had, I think 4 videos total in my YouTube career make me over $1,000, I think. So, I mean, it's a nice little investment and it's fun. It's just it's a cool residual kind of income. But you can have an online product like an education program we kind of talked about, or like an education program or network marketing, like being an affiliate. So pretty much how this works, how you would invest your money if you want to be an affiliate. Lots of people make $100,000 off this. Easy. I know that, my mom does stuff like this too. She doesn't make $100,000 from that specifically, although she did a lot more in sales in total. But in term, like, you need $500 for pretty much advertising online and learning Facebook ads and Google AdWords, stuff like that. So pretty much what happens is, let's just say you want to earn a commission on a $500 online product or product in general. You get paid a commission of $100 if you sell the $500 product. So what you do is you spend $500 and hopefully with the right training and education, you'll make you'll sell 15. You'll make $1,500. Hopefully from $500 in marketing. Then you repeat that. You repeat that in 3-4 weeks. Do it again and again and again, and you just keep trying to sell product with this initial investment. But you need some marketing expertise, right? So you're semi-active, you need to know how to marketing. But it's a good way to invest your money. I mean, like, I gave a shot at affiliate marketing, I want to say, I think that was before I made a YouTube video, to be honest. This was years and years and years ago. And like I sold 2 things, but like I broke even. I remember that it was only like $50 I put in, and I sold 2 things. And then but like you can set up an online store. Like I set up an online clothing store, and I sold. I never made a shirt. I never made anything. I made the design, which was just my time. There was 0 fees, and I sold like 25 shirts or something like that. It wasn't very much money. I made like $5 on a shirt, but like it was just, an online store. It's a good way to invest your money too. But again, it's one of those things, it's like an upstart fee of time and maybe money. And then you kind of just have to be semi-active for the rest of it. You just have to keep an eye on it. Hey, is this working? Hey, is this not working? Maybe you put in 20 minutes a day just looking at your stuff, and that's about it. So that's another way you can invest your money. Just launch a product or business or something like that. So a good example of this would be like Jeff Walker. Have you guys heard of him? He launches online programs. Jeff Walker. He launches online programs like every few months, I think. And like Brendan Burchard, he does stuff like this too, where he just launches a program, stuff like that. They're pretty much marketers. That's what they are. And you know what? I like them. There are some people that are scams out there. You got to keep an eye out for those. Don't be a scammer. Make sure that if you're selling something, that you're actually, giving value to the customer. Because if you're selling something and you know that someone's not getting any value from it, you're a horrible person. Seriously. And I'm a guy who admits to that money is like his main goal right now. So just don't be a dick. Make sure you sell stuff for value. So number 11 is commodities. Commodities. So what are commodities? Oh, a lot of you probably know. So this is stuff like oil, silver, gold. And so actually Peter Schiff loves this stuff because he has a gold company. Or no, a silver company. Is it silver? I forget. I think that Peter Schiff has a silver company. But he talks about this all the time. So commodities are, if you want to invest your money, you can do this online or you can get physical commodities. But like, I don't know how much you need to invest in gold. I've never done it. I'm guessing it's going to be around, I don't know, $200 maybe. Maybe it's $500. right? Maybe it's 1,000. I don't know. But yes, for silver, oh, I didn't even spell silver fully. So yeah, commodities are a weird one because you can own them without physically ever seeing them or holding them. I'll explain both ways right now. So actually, oil's a funny one. So you can invest in oil, in like oil, a quantity of oil, but like in order for you to physically buy a barrel of oil, you have to go through like an independent person. You can't go up to like Chevron, just be like, hey, I want a barrel of oil. Can I buy some? You can't really go. By the way, oil expires. Natural gas expires. So directly buying oil is probably not the best thing for the long term, but short-term investment could be good. Oil and natural gas expires in 4 to 10 years roughly. So it's actually interesting. It turns into like a sludge. It's, the natural gas, it's kind of like it is oil. That's what it is. It's like oil, water kind of texture. It turns into like jello-ish or like a slush. I think slush is a better term for it in 4 to 10 years. So long term, buying natural gas is not good, or oil. But yeah, silver and gold, I don't like those markets. I never really invest in silver and gold just because, although the market for silver and gold kind of goes like this. It's very cyclical. In general, it goes up in the long run, but it's very, very cyclical. So if you can just buy right here at the bottom, you can probably make a lot of money. I know a lot of people have. And gold and silver prices generally go up during a stock market recession. But not, I don't know. I'd have to double check my facts on that. But that's just the impression that I've got from it. So you can invest your money in silver and gold. They'll probably go up in value over time. I mean, you can physically buy silver and gold too, not just like equity online stocks in them. You can physically buy, gold jewelry and silver jewelry and items, and just buy a large quantity and buy $1,000 and hopefully you sell it for 2,000 in 10, 15 years. So that's another way. Commodities, I'm not a big fan, but I know people make money from that. But I think it's one of those things where I think an equal amount of people will lose money from commodities than they will gaining money from it. Yeah. So I think diamonds, would that count too? You can get diamonds. I know that they're not on the stock market, but maybe you can buy diamonds too. I don't know. I think that we're at the last one here. Oh, number 12. I should erase that. Number 12. This is a long talk here. My voice is just gone. So this is kind of a funny way to end it. I mean, okay. Number 12 is art and collectibles. Yeah, art and collectibles. Why? Why art and collectibles? I mean, it's, I would never, I would never invest in art directly. I'm just not one of those guys, and it's usually just for rich people. I mean, to invest in art, you're going to need $1 million anyway, so you're probably out for art. For art to be an investment, you're going to need $1 million, because if you spend less than that from a piece of shit artist or whatever for like $1,000, odds are it's going to not be worth $1,000 in 10 years. That's just the way it is. But if you buy, I don't know, a Van Gogh painting, right? It's probably going to go up in value within the next few decades. That's just what happens. But collectibles, I have an example of this, which was unintentional. So when I was a kid or teenager, and even up until, I was a teenager when I stopped. So I was one of those nerdy kids who played with, Pokemon cards and Yu-Gi-Oh cards and Magic cards. And I used to go and find deals on eBay or in stores and be like, hey, this card is like really good for me. And there's a lot of value here. I mean, like, why is it so cheap? So I'd go and I'd buy it, and I would spend hundreds and hundreds and hundreds of dollars when I was a teenager on this stuff. And so I was looking at those prices just out of curiosity about 4 weeks ago when my brother started buying some Pokemon cards. And I could sell a lot. I could probably sell my entire Magic card collection for around $4,000 maybe. I probably spent $500. I could probably sell for $4,000. Yu-Gi-Oh is probably around $2,000 to $3,000 maybe I could sell it for, but I probably spent about $1,000 on those. And Pokemon, I could probably sell it for about $750. And I didn't pay anything because my parents used to, like, I was a little kid when they used to buy me cards, Pokemon cards. So, I mean, you can invest in stuff like cards. It's, if you're smart, I mean, or lucky. I mean, I wouldn't recommend it, but like you can do it. Stuff like in hockey cards and rookie cards and football cards, baseball cards. You know, someone bought the first baseball card ever and it was what, 50 grand or 100 grand it sold for, something like that. So I don't know what other collectibles. I know people like dolls. I don't know why, like Disney collectibles and stuff. I'm just trying to think of more collectibles. Do you guys have any examples of collectibles? Oh man, I don't know. I'm kind of running out of ideas here. Collectibles, what's something that's rare? I don't know. I'm out of ideas here. Anyways, that's kind of what I was going for here is, yeah, just collectibles, cards, dolls, statues. I don't know. Stuff like that. So I gave you 12 ways that you can invest your money. Do you have any more ways that you can invest your money that's smart and that everyday people can do? And yeah, I would just like you to send me your questions on Twitter, because this wasn't a question from Twitter, this one, but I like answering them. I made a bunch of videos on that. So follow me at JackChappleSci. Send me your tweets with your questions. You can send me a message on Facebook. You can like my Facebook page. I put stuff on there every day, which is funny, usually, or try to be funny. Chapple REI. So facebook.com/Chapple REI. And yeah, that's all I really have to talk about. This was a long-ass video. Oh my God, this was a long video. So I'd like to thank you very much for watching. You're all very beautiful people, and I will see you guys next time.